Welcome back. We have been dealing with preparation of fund flow statement. Let us discuss some of the adjustment cases that comes under fund flow statement. In the meantime, you just have to go through all the cases which we have discussed previously and remember the concept, various adjustments and the various steps that has to be considered during the preparation of fund flow statement. Next case. Following has summarized the balance sheet of Kitex Limited as on this date specified in the question. A comparative balance sheet is given. Just go through the items in the balance sheet, familiarize each concept and the nature of adjustment that has to be prepared for each item. The additional information, it is said that profit for the year 2015 after charging depreciation rupees 14,000 on fixed asset and provision for tax rupees 2,000 was rupees 2,400. So during the year P&L is given. Next information, rupees 1,600 worth investment were sold for rupees 1,700 and the government bonds worth rupees 3,600 were purchased during the year. So it details regarding to the purchase and sale of investment. Next one, company paid dividend of rupees 8,000. Next one, fixed asset worth rupees 2,000 was sold for 2,400 and the profit credited to profit and loss account. So let us prepare the fund flow statement. So before that, first you need to find schedule of changes in working capital. And we all know how to prepare a schedule of changes in working capital. It considers only current items and none of the additional information may not affect preparation of schedule of changes in working capital. So the pattern is familiar to you guys. Here is the balance sheet given in the question. We will prepare a schedule on the basis of details given in the balance sheet. And we all know how to prepare the schedule and its format. Let's begin with current assets. You can see that there are three items as current assets given in the question. First one is stock. In the beginning 48,000, by the end 42,000, and you know the drill. Next one, debtors 42,000 and by the end 91,000. So there was an increase in current assets and you know how to write down the next step. And next one is back. At the beginning it was 29,800, by the end it was 39,400. So there is an increase and it has to be shown accordingly. So there are no other current assets given in the question. Let us take the total of first two columns. Remember, you need to take the total of first two columns only. Once you have taken the total of current assets, next you have to go for current liabilities. And in the question there is only one item, creditors, and no other information regarding whether to take any of the items in the balance sheet as current items. So since there are no information, we can end with creditors. In the beginning it was 33,600, by the end it was 26,800. So there is a decrease in current liability, so the difference is shown accordingly. Since there are no other current items or current liabilities, we consider these amounts as the total of current liability. Once you have taken the total of current assets and current liability, next you need to find working capital, and you all guys know how to find working capital. Just take the difference between the total of current assets and this amount and the difference between the total of this amount and this one. Here 1,19,800, the total of current assets of the first year has to be taken, and the first year total current liability has to be taken. You need to take the difference of these two amounts, then you will get 86,200. Again the same pattern in the second year also. Here the total of current asset is 1,72,400. Here the total of current liability is 26,800. So you need to take the difference of these two amounts, you will get working capital here. So now you have got the working capital for these two amounts, and you can see that the right amount, that is 1,45,600, is a bigger value. So you will take that amount as this total, and the difference amount will be considered as the increase or decrease during the period. So let us find the computation. Here the difference amount is 59,400. It is considered as increase in working capital. And if you have doubt in recording increase in working capital, it is quite easy. Once you done the balance, just go through these two columns and see which side is bigger or bigger total is in the which side. You can see that here the increase in working capital column has a biggest value here 65,400. So whatever difference you are getting on the base of next column, that amount is considered as the increase in working capital column. Here the name is given on the base of which column which you are having the highest value. It is just a trick for computation. So he has got 59,400 as the increase in working capital during the year. Once you have prepared the schedule of changes in working capital, next you need to prepare fund from operation. In order to find the fund from operation, you have to prepare some non-current accounts. So let us prepare some non-current accounts. Here the question was this one, and on the basis of additional information, let us begin with preparation of non-current accounts. First one, let us begin with fixed assets. As we have done earlier, here fixed asset total and opening and closing balance is given. So let us write down opening as well as closing. Opening is 80,000, closing is 64,000, and in the adjustment it is said that depreciation on fixed asset is 48,000. Since there are no other provision for depreciation like that, let us take that amount as the depreciation on the asset. So provision depreciation 14,000, and it is also said that fixed asset worth rupees. If you go through, since we are preparing fixed asset, just to go through the various information, because sometimes some information regarding the fixed asset might be given in the coming points. Here in the fourth point is that the fixed asset worth rupees 2,000 were sold for 2,400. Since we are preparing fixed asset account, we are considering this additional information. Here costing rupees 2,000 was sold for 2,400. So it is a profit on sale. So first of all, let us write down the amount which we have got from the sale. By bank 2,400, and here it is sold for profit, so it has to be shown accordingly to P&L 400 rupees, because that was a profit. Here 2,000 was the value of the asset, it was sold for 2,400, so the difference amount is profit. Since there are no other further information regarding fixed asset given in the question, and in the preliminary analysis you can see that both the sides of the fixed asset is equal. So there are no other balances, just note down the total amount. So we have prepared fixed asset account. Next you need to prepare depreciation account, since there are no information regarding the opening as well as closing balance or depreciation, so leave it. Next you have to prepare investment. We will come to the provision for tax. Before that, let us deal with second additional information, investment. So just like the fixed asset account, first of all note down the opening balance as well as closing balance. Opening balance is 10,000 and closing balance is 12,000. And remember, usually investment is taken as a fixed asset unless it might be specified in the question or additional information that investment is a short-term asset. In that case, it has to be considered as a current asset. Since there are no information, usually investments are taken as fixed asset. Okay, leave it. In the adjustment, it is said that 1,600 worth of investment was sold for 1,700. So a certain investment value 1,600 was sold for 1,700. So it is natural. We can see that there is profit on sale of investment. So first of all, let us note down the sale amount by cash or by bank. That depends. In the question, see, if it is given cash, try to use cash. Since it is given bank, that is why we are using bank. 1,700. And remember, once you write down the sale, you have to mention the profit as well as the loss. If there is profit or loss, you have to mention that. Otherwise, you need not have to. Here the value is 1,600. It was sold for 1,700. So there is a profit of 100 rupees to be entered in bracket profit. And in the information, it is again said that government bonds worth rupees 3,600 were purchased during the year. So note down the investment amount to bank 3,600. Since there are no further information given in the question, you need to just take the total. See, you can see that both the sides are tallying, so you need not have to worry about balances amount. Next, you have to prepare is tax, because in the first information there was details regarding provision for tax. We just skipped at that time. Now let us prepare the tax account, and in the question it is said that provision for tax opening and closing balance is given. So let us note down that amount. Opening balance is 15,000, closing balance is 2,000. And usually we were doing that to cash, we will write the opening amount as to cash and the closing amount as by P&L. But in this question there is adjustment given. Provision for tax 2,000 was rupees, provision for tax is rupees 2,000. So remember, by P&L 2000 has to be shown, and how we recorded that 2000 as by P&L instead of to cash amount. See, in the first information it is said that profit for the year 2015 after charging depreciation of rupees 14,000 on fixed asset and provision for tax 2,000. Usually in a tax account or provision for tax account, there will be four amounts. To bank, here it is by balance BD, opening balance, closing balance. Here it will be to cash, and here it will be by P&L. Remember, it will be to cash and by P&L. So in the additional information it is said that here profit is earned after considering this depreciation tax amount. Here 2000 is considered in the profit and loss account. That is why we are taking that amount as by P&L account 2000. So the difference amount will be naturally to cash or to bank 15,000. That is how we have to prepare tax reserve account. Whenever no additional information is given, you will consider the opening and closing balance as to cash and by P&L. Since there is additional information given in the question, you have to do it accordingly. That is the concept of preparing tax reserve account. And we have prepared almost all the details. And remember one more additional information. Company paid dividend 8,000. Since there are no details regarding opening balance as well as closing balance of dividend, you need not have to prepare another account. So we have prepared almost all the accounts. Now let us prepare fund from operations account. It will be beginning with preparation of fund from operation. It will be begin with net profit during the year, and it is said that profit for the year after charging depreciation and provision for tax was 2,400. So let us note down 4,400. And you may think that why we add this 2000 along with 2400 and return 4400. We all know for finding out fund from operation, you need to add back non-operating expenses. And during the course of computation, I will explain why we add this 2000 along with this 2500. Okay. Next one. On the base of account, you can write down all the P&L items as well as depreciation or loss of sale of assets. First of all, let us note down depreciation. Here 14,000. We have recorded that. After that, let us add together all the non-operating expenses. Then we will deal with profit items. Next one. Investment, there are no other P&L or depreciation items, and in the tax reserve there is a P&L account 2,000. We didn't took that 2,000 here. Instead of that, we add that 2,000 here. Remember, here you might have taken this 2,000 here as provision for tax during the year. Instead of that, we just added earlier. There is no much difference in that. See, and let us go through the question part, and you can see that there is a reserve fund of rupees 60,000 in the beginning, in the close end 62,000. So I said transfer of reserve 2,000. That's why we recorded that 2,000 here. There are no other item that has to be considered, and in the additional information there is one item for which we haven't prepared any account, that is dividend paid 8,000. So while preparing fund from operation, we have to be very cautious, and I hope you understand the amount here we have done, why we added this 2000 earlier. There is no rule regarding you have to add this 2000 here. Instead, you can begin with 2400, and you can write down this by P and that's provision for tax as 2000 here. Both the steps remains and affect the same. That's up to your discretion. I am just showing it a pattern of computation. So once we have done all the non-operating expenses, we have to go for the non-operating incomes, because we have left that items. Here profit on sale of fixed asset 400, and another profit also, profit on sale of investment 100. There are no other item that has to be considered. So let us take down the total of fund from operation, and you will get 27,900. Once you have prepared fund from operation, you need to prepare fund flow statement, and you know the pattern for preparing fund flow statement. First of all, let us begin with the first step value. That is, in the first beginning, we begin with schedule of changes in working capital. Let us note down that value. In that case, it was increase in working capital, so it is an application and shown here. After that, let us show fund from operation amount. This is a source of fund that is shown here. Remember, if this amount was a negative value, that has to be shown in the application side. Usually you may not come across such type of question. After that, let us go through the non-current accounts, and remember, you have to go through only cash or bank items. And in the first item, fixed asset, you can see that there is a sale of 2,400. There are no further purchase in the fixed asset, so let us leave that account. Next, you have to go for the investment account. You can see that there is another item by bank and to bank. There is purchase as well as sale, so you have to show those two items accordingly. Purchase is an application, so 3,600 is shown in the application side, and there is 1,700 sale in the investment, so it is shown in the sources side. After that, next account is tax reserve. There is a payment of 15,000 during the year, tax paid 15,000. Once you are dealt with the non-current accounts, you just go through the additional information, because we didn't prepare one account for one information. See, for the third item, company paid dividend of 8,000. We haven't prepared any account. But if you neglect the additional information, you might lose this in value. That is why I have mentioned earlier, you just go through the additional information again. All other items has been dealt accordingly. So dividend paid 8,000 has to be shown in the application side. Before that, let us go through the balance sheet. Here, share capital, no different. Reserve is already taken. P&L is already taken. Loan. In the beginning, there was no amount. By the end, there was 54,000. So loan raised during the year, that is, it is a source. So raising loan 54,000. And there are no other items. So next, and the final one, dividend paid 8,000 has to be shown accordingly. And if you take the total of these two sides, you will get a same amount. If you are getting a same amount, or if your fund flow statement is tally, then means your computation and steps were right. So just go through various concepts and adjustments which we have discussed now. Understand and familiarize each steps which we have discussed. Just go through it. If you have any issues or queries regarding the computation or any of the steps which we have discussed, please let me know. So that's all for today. We will discuss about the further adjustments in the coming sessions. Thank you.